Hi, and welcome to the Stock Scores Market Minutes for June 13th, 2016. This week, it's all about the base. What do I mean by that? Well, when we're looking to buy stocks, we want to look for those that are starting a trend, not those that are well into one, because the higher stocks go, the farther they can fall. And this is particularly true with more speculative, low-price stocks. It's better to buy stocks that are near a sideways trading base that gives this trade some downside protection. This makes a little more sense when we look at a trade visually. Now, this is a trade that I did this week on Triangle Petroleum, TPLM. The chart you're looking at is a 15-day, 15-minute chart. And it basically, couple weeks here, 3 weeks. And you can see that right here we had a nice ascending triangle pattern. But look at the low volatility. The stock was trading in a very narrow range right around 23 cents. And then it came alive here with some volume. And that is the point that I bought the stock because it was near a base. Buying up here or up here is not buying near a base. The stock was already well into an upward trend. I actually sold this stock right there at the close before it fell lower on Friday. All right, let's get into this week's market analysis. The S&P 500 30-day, 60-minute chart shows a break of an upward trend line from a falling top this week. Again, very short term, but that is a short-term cautionary signal. Now, we did fall into some range of support here. Could hold up next week, of course, with the Fed meeting on Wednesday and the Brexit vote the following week. The market's showing a little bit of nervousness ahead of those events. Also, no surprise because the market is hitting that long-term resistance that we've talked about many times. It's just stalling at these old highs, and it will take some time to get through that, if at all. We could, in fact, see it reverse here, but on this weekly chart, there's still no break of trend, and so you have to remain somewhat optimistic, although short-term, I'm a little bit cautionary. On the the smaller cap stocks, we had the break of the downward trend line a few weeks ago. We ran up a little bit. Now we're stalling. We came off the highs of the week and closed near the lows of the week, near the open of the week. You can see right there. And so that sets up for maybe a little bit of profit taking short term, but still this is a healthy looking chart. It feels like money is rotating into the smaller cap stocks from the large cap, or at least they're catching some bids again now that investors are feeling more confident. On the Canadian market side, we had some selling pressure, largely because of some weakness in oil. Hit some support here. Of course, the Canadian market, when oil is weak, it makes the banks get weak. And we had 3 days of selling pressure after it hit this high here. Because we're at support, we should bounce, but I think this is a cautionary chart because volatility is really picking up, and that shows investors are feeling uncertain. And it shows up on the weekly chart where we closed well below the low after hitting a new high. So that points to probably more of a pullback into this $20 range on the XIU. On the small cap side, the strength that we saw in gold this week helped this sector break to new highs through this resistance level. So gold, which had kind of been looking toppy, actually caught some bids this week and looks like it could go higher still. And so interesting how there's a divergence here where the small cap Canadian stocks continue to look pretty good after looking ugly for so long. Treasuries is also interesting because ahead of the Fed meeting where some are expecting a raise in interest rates, bond prices have actually risen largely because of issues in Europe. And that means interest rates in the US have gone down. Looks to me like this can continue higher until it hits longer term resistance, which is not too far away. Whoops. On the US dollar side, there we see the trend is down, but trying to hold some support. We came back from some weakness this week. I would say this is a slightly negative chart. Looks more likely to go lower, but not significantly so. And so I don't know that we're going to see a lower US dollar here. We may try to make another stab at breaking this downward trend line now that a rising bottom has formed. On the gold side, real wishy-washy chart. We had that nice breakout from a pennant pattern, and then we kind of failed as we fell back through resistance. And then this week came back from that to break out of a flag. So on one hand, we had a positive signal. Then we had a negative signal, and this week we have another positive signal. So what does that mean? Tough to call. Still needs to get through that longer term resistance. I think you trade the gold miners very short term. Don't be a long-term believer in them. Don't turn your back on them because they could surprise you one way or the other. On the oil side, we tried to hit new highs this week, but kind of failed. fell back at the end of the week as some profit taking occurred in the oil chart. This is actually doesn't show up so much on the weekly chart, but on a daily chart, we have a rising wedge pattern that is building. And if we get a breakdown through that line, we could actually see some selling pressure into the summer. So I want you to be cautious with your oil holdings. Not a big deal yet, but something to keep an eye on. And I think this is the most important chart of the week. This is the chart of the VXX, the VIX ETF, which is often called the fear index. And fear broke its downward trend. And so again, with all of these events coming in the next couple of weeks, the Fed meeting, the Brexit vote, where Britain may leave the European Union, those things are giving the market some reason for caution, and I think you should have the same. We see that spike up in volatility, which started on Thursday and continued into Friday, and we could see that continue with some selling pressure next week. So I've dropped my ratings on US and Canadian stocks to neutral on both time frames. They don't look particularly bad, but I think it's important to have some caution here as there's a little bit of worry coming into the market. Gold long-term neutral, short-term bullish. It had a good little run this past week, but still that long-term weekly chart, very mixed messages, and it's hard to determine where it's going to go. Oil, I've lowered my ratings to neutral in both time frames. It looks like it's running out of steam, but still no trend line break, so it's not yet time to be bearish, but hard to be bullish as well. Weakness this week in stocks and oil should raise some caution flags. The pickup in volatility indicates nervousness about interest rates and Europe. With stocks hitting long-term resistance, be very selective right now. Gold is difficult to predict, but it is tradable short-term. Just take a very short-term time horizon with that trade. Fear is on the rise, but still relatively low. Just deserves a little bit of caution. Well, that has been the Stock Scores Market Minutes for June 13th, 2016. Have a great week in the market and trade well.